Hi, Bill Brooks, Boulder, Colorado. How you doing? Hey, I've got some business tips for you for 2014 that you should consider before we're into another new year. And it's kind of an interesting year. Usually this happens, but there's legislation before the House Ways and Means Committee, which may change some things, so you have to be kind of on top of it. Fundamentally, what I'm talking about is the Section 179 deduction. That is being considered right now, whether it's going to be um, uh, ramped up to 250,000 or whether it's going to remain at $25,000 right now, which is where it's at. Also, bonus depreciation, that is also being considered right now. And so there's, let's say, an awareness that we need to have in order to contemplate whether we're going to buy assets this year or push it into next year. Um, Also, keep in mind too that if you bunch more than 40% of your total asset purchases into the fourth quarter, that there'll be a reduction of your depreciation. So it might be a good idea to defer some purchases into 2015. Startup companies probably need to get it done before the end of the year if they want to take advantage of the $5,000 of organization costs expense. And that is if you, in fact, start the business before the end of the year, that's December 2014. And also, these expenses are expenses that you would normally deduct in your business anyway. For those corporations that are considering bonuses, you should probably do so. You can declare the bonus and then pay it by March 15th. It's good for accrual corporations and cash as well, except for majority holder C corporation shareholders and S corporation shareholders. You might also consider writing off bad debts that are truly uncollectible. Keep track, though, of attempts you've made to collect the debt, just to have an audit trail. Remember, you can boost your retirement plan savings contributions by funding your 401k and also matching. Keep in mind that the matching is available if you, as an employee, pay into your 401k at least 6% of your gross pay, and then your employer can or should then match that if it is in fact a matching plan. There's a health insurance credit of up to 50% of health insurance costs for companies that have less than 25 employees and average wages are less than $50,800. That credit, by the way, of 50% of health insurance costs is reduced if you exceed those limits just mentioned. And fundamentally it. If you have any questions, be sure to consider me as your tax planning resource. My phone number is 303 447 1626.